Mortgage Group. We're so excited to invite you to our first Homebuyers program online. So this is going to be a 120-day first-time homebuyers program. It's not just for first-time homebuyers though. You've kind of purchased a home 5-10 years ago and just getting back into the process, or maybe you're not even thinking about buying for the next year or two, or maybe even 5 years out. That's okay. This group is really open for everyone. It is an open group. So if you, your friends, family, coworkers are interested in buying a house, feel free to invite them to this group, and we'd be glad to educate them as well, or give them the resources that everyone should have the rights to and availability to. We do have Chris Ann with us today. She is an expert lender. She's been in the business for over 20 years, and we thought that she would be a great resource for you all as well to kind of share some of her thoughts on what first-time homebuyers should be doing within the process, and maybe answer some of those questions that we all kind of have when we first go to buy. So as a reminder, this is going to be a 17-week course. So every week we're going to be posting new content for you that will be covering an extensive detail so you understand the full process. When you're ready to buy a house, you're probably going to know more than I know about the process, which will be interesting to see. At the end here, we'll find out exactly what you've learned and be able to go from there when you go to purchase a home. Chris Ann, as far as first-time homebuyers, I know with you being in the industry as long as you have, what are some common things that you think people have kind of brought to your attention? Such as down payment, credit scores, things like that. What are those first-time homebuyers really leaning towards as far as their questions?
Okay, yeah, actually, thanks for letting me be here and be a part of this.
Oh,
it's
we're
really
excited
exciting.
to have
Yeah,
you.
it's a good thing you're doing for people. One of the common mistakes, or not necessarily mistakes, but the common things I see occur is that people start to think about a house and they might go, oh, let's just go look. Let's just go see what's out there. And it'll never fail. You're going to find a house in that weekend or while you're just looking that you're really interested in. And so now all of a sudden you're excited, you're wanting to get something done. You might want this exact house and you haven't done the homework beforehand. And so you're now in a situation where you're at the mercy of whatever the interest rates are of that day and what type of payment you can end up with. And doing it a little bit backwards. What you're doing here is helping people get themselves in a better position to bargain and to negotiate. So by knowing what your credit score is, by knowing how much money you want to put down, simply knowing what payment you are comfortable with, because a lot of times you'll be able to afford a lot more house than you're comfortable paying. And so what's great about what you're doing is you're helping people understand those components so that when you do want to go find a house, you're already educated, you're confident, you're going to be able to put down on a contract that is very much in your comfort zone and not doing it backwards, I guess is or sort of falling into it. Do you know what I mean?
Yeah, that's exactly.
So like I always think it's funny that people will call, okay, I think I want to buy a house, I wonder what the interest rates are. That's the first question we always get. What's your interest rate? Do you even know really what you're asking in that situation? Because anyone can tell you what the interest rate is for the day. It doesn't mean it's going to be your interest rate. Your interest rate is going to be a impact on what your credit score is, how much money you want to put down, again, what your payment is. All of that's going to impact your interest rate. And so by getting that stuff in line and beforehand, you'll get to choose the rate that's best for you, not just any rate.
Right, exactly. And what, Chris Ann, just to elaborate on interest rates, a lot of folks, you're right, they go to bankrate.com and we're Googling and we're like, okay, well the rate for the day is 4.25, but we don't understand exactly how we got to that rate. Mm-hmm. And with every circumstance, there's going to be different, what the bank calls adjustments to place you in that specific rate. And the idea of this class, again, is to kind of explain how we get to that point. So that way, when you are ready to buy, you know that we've prepared ourselves to be within a specific bracket or specific adjustments to purchase a home. And by adjustments, again, going back to rate adjustments and your different criteria, such as your credit score, down payment, things like that. But to elaborate, I guess, on down payment situations, I know almost everyone thinks they need 20% down to buy a house, which blows my mind because who has 20% down as a first-time home buyer?
Yeah, no.
What are some first-time home buyer programs that you're aware of as far as ranges of what should people really realistically be prepared to put down for a home?
Yeah, I mean, you can put as little as 3% down. I think the most solid spot to be in is the 5 to 10% down. And again, that depends. I mean, 3% is just as solid, especially if you have a good credit score. So again, if you can help them do the homework to get the credit score in a good place, you can put as little as 3 down. And what's nice here in the Midwest is we still have very affordable homes. And you're looking at 3% on a $150,000 or $175,000 house. That's a lot easier to save in 2 or 3 or 4 months than it is to try to get to 20.
Right.
The nice thing is a lot of times that money can be gifted to you, and that's just as valid. So again, being able to know what those parameters are will help you. And again, just kind of going back to the interest rate team, I think especially when you're looking at $175,000 or $200,000 home, if you really knew the difference between the interest rates, we're talking over a course of a year, $5 or $6 a month, maybe $15 a month. You don't haggle over your Starbucks like that. So let's make sure you're getting the right rate and not worry so much about what the interest rate is, but what's my payment every month, and where is that payment going to?
Right.
Is it going to interest? Is it going to principal? Is it going to mortgage insurance? All of that is important to know. And so,
yeah. No,
did I answer your question?
Definitely did.
Good.
And you know, that brings up just something that I had a first-time home buyer ask me this past week. Actually, is they had some extra funds. They had some $10,000 that a family member had given them for their first home purchase. They already had their 5% down, and when we sat down and we broke down if putting that 5% down or adding that another $10,000, you're right. It was like a $10 monthly payment difference. And what blows folks' minds about that, because when you really think about it, most loans are, by standard, 30 years long. 30 years with $10,000 spread across that time period, that payment adjustment is going to be so minute that sometimes it makes sense to hold on to that $10,000, especially with being a first-time home buyer, because there's some things that might come up that maybe you weren't thinking about that you didn't have to worry about as a renter. Now, there's lots of things we're going to talk about through this program, like home warranties that are going to protect you in those types of situations. But let's say if you just didn't have a home warranty and the furnace goes or something like that, having that $10,000 would be extremely beneficial for you. Or maybe none of those things are an issue, but you wanted to go to Nebraska Furniture Mart and get some new furniture for the new house you just bought. Those kinds of things, it's nice to have, sometimes some reserve money and really look at the financial situation as a whole before diving in and be like, yeah, I'm going to put 10% down, and that's good, what I'm going to do. Let's look at it as a whole situation before we make lifelong decisions like that when it comes to purchasing.
That's such a great point. So we're haggling over a 3.5 to 3.75 or a 4.5 to 4.25 interest rate on $200,000.
Right.
You put all that money down in it, and then you turn around and go to Nebraska Furniture Mart at a 20% or 18% interest rate,
right,
when you could have just paid cash for that great TV and the beautiful couch, and so your money is working more efficiently for you. So those are definitely problems, or not problems, but things a lot of first-time homebuyers don't think about. You got to put some furniture in the house that you just bought.
Right.
You got to buy a lawnmower now, and a rake, and a shovel here in this part of the country.
Especially with those kind of stuff.
Oh yeah, yeah. So
exactly.
we want to make sure that you don't get upside down all of a sudden once you're in that.
Awesome. Well, with us prepping for the next 17 weeks here, hopefully you're going to follow us the full 17 weeks, because I promise the amount of information that we've put into this and that we're going to be sharing with you it's going to be crazy how much you know by the end of all of this. We've got full syllabuses put together, so we're hoping that this is of great value to you. During this process, if you have any questions, comments, concerns, you are more than welcome to private message us. If you think that your question's of value for the entire group, which I'm sure it's going to be, feel free to post that. That way we can answer that question for everybody and everyone gets the same information. And again, if you'd ever like to reach out to us in regards to something a little bit more personal, you're more than welcome to call us or to private message us as well if you don't want to share that information. But over the next 17 weeks, we're going to be talking about credit. We're going to be talking about down payments, private mortgage insurance, escrow accounts, the whole 9 yards are going to be covered. So we'll be posting that syllabus there for you as well. Again, if you have any questions or concerns, reach out to us. Again, this whole process is meant to just be educational for you. We just want to make sure that you as a first-time home buyer, second buyer, third buyer, have the information you need to make a comfortable purchase in the future. So again, thanks so much for tuning in with us. We'll talk to you soon.
Thank you.